This is our first market update for 2025, and so a very happy new year to you. Before we take a look at the markets, I must ask you to please make sure that you have read and understood these disclaimers. We will start with a look at the S&P 500. This is SPX data, and our previous market update video was just over a month ago, over here on the 9th of December. At that time, we were anticipating a 40-day cycle trough, which, as you can see, has been found in this analysis over here just a day later on the 10th of December. Notice, however, this floating circle and whiskers for the 20-week cycle trough. This we discussed when we took a look at the ASX, I think it was, and it provides us with a little bit of an anomaly in this analysis. When we take a look at the Nasdaq, you can see that that anomaly is resolved by the fact that the 20-week cycle trough has been found in the analysis. And as mentioned in my previous market update video, it is very likely that the 20-week cycle trough will form at the same time in both the S&P 500 and also the Nasdaq. Therefore, we need to bear in mind the fact that the 20-week cycle trough might have formed. But I find it interesting to keep tracking this analysis, because often, even when there is some uncertainty in the analysis, we are able to gain clarity in terms of making trading decisions by closely observing the price action. And so if we take our attention away from that floating circle and whiskers, we can focus our attention on the price action by hiding the cycles that we don't have absolute confidence in. And now we see a much clearer picture. We have an 80-day cycle trough over here at the beginning of November, a 40-day cycle trough that has been positioned here, but it could equally have formed over here. The important thing is that price is now coming down into an 80-day cycle trough, which is expected sometime this week or early next week. Note that if we displace this 40-day cycle trough from this position over here to that position over there beneath this very clear trough in the price action, that would of course also displace our 80-day cycle trough by an equal amount. The important thing, of course, is that price is now heading down into an 80-day cycle trough. An important level to watch is going to be the low price of this trough on the 4th of November. The reason for that is because that will provide an obvious support level. Is the 80-day cycle trough going to form there, or is price going to keep moving down? I would encourage you to go back and take a look at our previous market update video in which I took a longer term picture, and I must remind you that this market, as with many of the stock markets that we looked at, is expecting an important cycle trough to occur in the first few months of this year. If we zoom out and switch to a weekly chart, here you can see the nest of lows for this 18-month cycle trough, which, as I mentioned, is expected in about March or April of this year, and indeed price is moving down into that 18-month cycle trough. The 40-week and the 18-month FLDs are going to be useful FLDs to watch as price moves down towards that cycle trough. I should point out that not all Hurst Cycles analysts agree with all the details of this analysis. There are some analysts, such as my colleague Christopher Grafton at Hurst Cycles Notes, that believe that the trough in early November could be the 18-month cycle trough, or certainly a higher magnitude than 80-day. The difference in terms of what is happening now is not very great, however, because even those analysts are looking for price to come down into an 80-day cycle trough expected in the next couple of weeks. The important thing is going to be how price bounces out of that 80-day cycle trough when it does form. Taking a look at the Nasdaq, we have an interesting comparison to make with the S&P 500. This is the analysis that we've been tracking for some time in the Nasdaq with the 40-week cycle trough over here in August. Notice that the 20-week cycle trough has been phased over here in the middle of December at this price low over here. I mentioned in the previous market update video that the 20-week cycle troughs were likely to be synchronous between the Nasdaq and the S&P 500, and that the 20-week cycle trough was due earlier in the Nasdaq. We were expecting it towards the end of 2024. And so in this analysis, the 20-week cycle trough has been found. This makes for a very interesting analysis because here is our nest of lows, a much neater nest of lows for the 18-month cycle trough. That is, of course, our big focus as we enter into 2025, as discussed in the previous market update video, because we are expecting an important cycle trough to occur in about May in the Nasdaq. That suggests that the first few months of this year are likely to be fairly bearish. Another interesting observation to make about the analysis in the Nasdaq is that we have seen a 20-week cycle elapse from August until the middle of December, and of course our expectation now is that the second 20-week cycle is going to play out, and it would not be unusual to see a fairly symmetrical price action. In other words, an early peak as opposed to a late peak in the first half of the move, and then a strong move down into this 18-month cycle trough. So far, price action that has played out this year doesn't give us any reason to doubt that the markets have turned bearish for the move into this important cycle trough. This provides us with a stern warning in terms of what to expect for the first few months of this year. In the shorter term, we need to keep an eye on this 40-day cycle trough that is expected in the Nasdaq. That is the trough that we were looking at as being of 80-day magnitude in the S&P 500. When this trough forms, we need to watch price action very carefully to see how it bounces out of that trough. If it gives us a good, strong bounce, then we would favor the S&P 500 analysis. However, if we only see a weak bounce out of the trough, the more bearish Nasdaq analysis is going to win the day. Tracking the analysis in the Australian market, the ASX, has been very useful in recent market update videos because differences between the analyses has been able to highlight times where a confirmation of the magnitude of the trough has been possible in one market, whereas it is in doubt in the other market. And the ASX provided us with another example of this. In the ASX, for our previous market update video, which was recorded over here on the 9th of December, I highlighted this 40-day cycle FLD, this blue line over here. We were again expecting price to come into a 40-day cycle trough, but I pointed out in the previous market update video the floating circle and whiskers for the 20-week cycle, which we saw earlier in the S&P 500. And I pointed out the possibility that price could be coming down into a 20-week cycle trough. By watching the way in which price interacted with the 40-day FLD, we would be able to determine which trough was being formed. As you can see, price crossed neatly down below the 40-day FLD and continued downwards, easily reaching its target at about over here before dropping even further and then forming the 20-week cycle trough, which you can see has now been phased in this analysis. This matches the analysis that we have in the Nasdaq. Now, of course, as price bounces out of a 20-week cycle trough, we might assume that that is a bullish thing. But as is the case in the Nasdaq, this current 20-week cycle is expected to be less bullish than the previous one and could even turn nastily bearish for price to come down into the longer cycle trough that we are expecting later in the year. Here is that weekly chart that we were looking at just as a reminder, and here is the nest of lows for the next 40-month cycle trough. Remember that we are working with a different nominal model in this market, which I discussed in the previous market update video. The important thing is that we are now in the final 20-week cycle of a much longer cycle. The final 20-week cycle is likely to be the least bullish of all of these 20-week cycles going back to about the middle of 2022. And so we have a warning in the Australian market as well that price could possibly be about to come down into this very big cycle trough expected in about April or May. Taking a look at the Nifty, let's turn things around and first of all consider the longer term picture that I pointed out in the previous market update video, which was for an important cycle trough, potentially of 54-month magnitude, to form in about May or June of this year. You'll notice that the Nifty has also got off to a bearish start to the year with price moving down. It certainly looks as if the Nifty 50 is already on its way down to this longer cycle trough. Zooming in on the Nifty 50, you can see that we have this 80-day cycle trough that we spoke about in the previous market update video, and here again is that floating circle and whiskers for the 20-week cycle, making it quite possible that in the Nifty 50 the 20-week cycle trough has already formed. If that is the case, then for the same reason as discussed in the other markets, that would be a bearish message. Certainly, price action has been fairly bearish since it bounced out of this trough of at least 80-day magnitude in the middle of November. Here is, of course, our first interaction between price and the FLD, the A category interaction. At about the time that the 20-day cycle trough is expected to form, we would be looking for price to find support at the level of the 20-day FLD. Could that have been over here? You will notice that according to this analysis, the 20-day cycle trough has been phased over here because there is a more obvious and prominent price trough. But it is quite possible that the 20-day cycle trough is better positioned over there, after which, of course, price dropped down below the 20-day FLD to form the 40-day cycle trough. Notice how these circles and whiskers are beginning to overlap the stacks of diamonds. That's an indication that the analysis is struggling to identify these cycle troughs, and that either the shorter cycles are expanding or they have been incorrectly identified. This cycle trough over here formed at 29 days, making it very likely, in my opinion, that that is a better position for the 40-day cycle trough, or we might want to phase it over here at exactly 40 days. Either way, it seems likely that the 40-day cycle trough has now formed in this market. Price gave us a cross-up above the 20-day FLD after that 40-day cycle trough. It neatly achieved its target, but then of course turned straight down again. It is almost certainly now on its way down into the 80-day cycle trough, the nest of lows for which you can see over here. I would be inclined to expect this 80-day cycle trough to form a little earlier than this nest of lows implies, because of the fact that I believe these shorter cycle troughs should be better positioned a little earlier than they have been found in the analysis. It is quite likely that the Nifty 50 will experience this 80-day cycle trough at about the same time that the 80-day cycle trough forms in the other markets that we've looked at so far. Taking a look at gold, we did an interesting thing in the previous market update video. We looked at both the trough analysis and also the peak analysis. Here I am displaying both of them simultaneously. And that is because gold has become a little difficult to analyze recently, and that is because of this triangular formation that is occurring at the moment in price. In my experience, this often happens when there is a change from trough-based cycles to peak-based cycles, and that might well be what is happening at the moment. If you take a look at the trough analysis, you can see that we have some good clean M shapes all the way into this 40-day cycle trough in the middle of December. This is the 40-day cycle trough that we were anticipating in the previous market update video. But notice what has started happening to price since then. Instead of us getting some clean M shapes, price has started to accelerate upwards. I don't mean to imply that gold is going to keep accelerating upwards, but the point is that the troughs have become a little difficult to identify. What we are expecting next in terms of the troughs is another 80-day cycle trough, expected in about the 3rd or 4th week of January. But now pay attention to the peak-based analysis. We have some good, clean peaks that are forming in this analysis. And of course, here is the big warning for the gold bugs, the possibility that a 54-month cycle peak has formed. I wouldn't place too much emphasis on that 54-month magnitude. Longer cycle magnitudes can be very difficult to identify, but we are of course expecting an 80-day cycle peak to form fairly soon, and so I will be watching to see how that peak forms to provide us with an indication of whether the higher magnitude cycle peak really has formed in this market. Of course, when looking at a trough-based and a peak-based analysis simultaneously on the chart, what we call a dual analysis, you will sometimes find a peak of a particular cycle expected at very nearly the same time as a trough of that cycle. That's an interesting thing which can occur because the two analyses are not directly correlated to one another, and they also provide an important warning to look out for. When you see these almost simultaneous peaks and troughs, it warns of a fairly dramatic price move that might be about to occur, in which a peak could form and then price needs to drop very quickly down into the cycle trough. Of course, if the trough forms first, then that would be good news, because then price would form the trough and very quickly move up into the peak. Bitcoin has been behaving very well from a Hurst cycles perspective. This is the same analysis that we were looking at, of course, at the end of December. Here we have an 80-day cycle trough in early October, a 40-day cycle trough over here in the third week of November. And here is the nest of lows that we were looking at in the previous market update video, centered on the first week of January. And so we are still expecting this 20-week cycle trough to form. There have been a few false alarms for the formation of this 20-week cycle trough. There was a possible cycle trough that formed over here, and then another one just last week. But as you can see, price is already today, and I'm recording this video before the US markets open, so there is still a good amount of today lying ahead of us. But price has so far been dropping down, implying that the 20-week cycle trough has probably not yet formed. We need to be watching the FLDs, of course. Here is a 40-day FLD. The 20-day FLD is pretty much mangled up in price and doesn't give us any very useful information. So I will be watching the 40-day FLD for confirmation that the 20-week cycle trough has formed. Now, we should always pay attention when we see these circles lying beneath a potential trough in price. Here you can see the circles for the 20-week cycle and the 80-day cycle at this point over here. Is it possible that the 20-week cycle trough did in fact form over here right at the end of 2024, or that might even have been in the first day or two of 2025? Yes, it is possible. Certainly it would match the analysis that we have in the Nasdaq, with the 20-week cycle trough having already formed. And so we do need to stay on our toes, because if that 20-week cycle trough has formed, then far from price turning around now in a 20-week cycle trough, we are going to be facing the same problem that we have with the Nasdaq, which is that the next cycle is likely to be a less bullish and potentially even a bearish one. So we need to be watching the price of Bitcoin very closely for the potential formation of the trough, or an indication that that trough has formed as a subtle or straddled trough and lies behind us. Zooming in to see how we can determine whether a trough is formed or not, here is the 10-day cycle FLD. Here is that 20-day cycle FLD, which I mentioned is very mangled up with price, but we would need price to cross strongly above both of these FLDs to confirm that a trough has formed, and so we need to be watching closely. I do hope you found this market update useful and interesting. If you have any questions, please put them in the comments below the video or join us on our Hurst Cycles Discord server.